Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. CBI arrests Videocon chief Venugopal Dhoot. The move sends shockwaves across industries. Arrest comes nearly 3 days after the arrest of high-profile names and ex-ICICI Bank chief Chanda Kochhar and her spouse Deepak Kochhar in relation to fraudulent sanctioning of credit facilities to the tune of 3,250 crore rupees. 3 high-profile arrests over the last 72 hours sent jitters across India Inc. India's banking industry witnesses one of the most high-profile money laundering scams, marking the downfall of the banking sector titans Chanda Kochhar and consumer electronics major Videocon. The bulls are back in action. Benchmarks reclaim important levels. Rally led by PSU banks today. Sensex closing with gains of 700 points. Meanwhile, the Nifty ended the session above 18,000 despite a mild pullback in the final minutes of trade. Broader markets reverse Friday carnage. And we get you market guru Chakri Lokapriya of TCG Asset Management talking about themes to hunt for this new year and what's making him bullish on banking, consumer discretionary and cement names. The Central Bureau of Investigation is tightening the screws on the infamous ICICI Bank Videocon loan case. Just 3 days after the shock arrest of Chanda Kochhar and her husband, CBI today took Videocon Group Chairman Venugopal Dhoot into custody. The founder of the cash-strapped consumer electronics major was arrested for not cooperating with the agency.
It's been a sharp fall from grace for Venugopal Dhoot, once the king of India's white goods market, with his brand present in every household in one form or the other. Today, the Videocon Group chairman found himself being led ignominiously by the CBI to a court in Mumbai. He's been accused of causing losses of 1,730 crore rupees to the ICICI Bank in concert with former MD and CEO of the bank, Chanda Kochhar, and her husband, Deepak Kochhar. Venugopal Dhoot founded Videocon in 1979 and received India's first license to manufacture color televisions. The company became one of the biggest producers, manufacturing TVs for other brands as well. Things started to go wrong from March 2016 when activist shareholder Arvind Gupta wrote to Prime Minister Narendra Modi flagging the illicit banking and commercial relationship between Videocon Group of Venugopal Dhoot and ICICI Bank MD and CEO Chanda Kochhar's family. Gupta reproduced the entire letter on his blog. 2 years later, with the nation already reeling with the Nirav Modi scam, the media picked up the blog post. Things came to a head by early 2019 when the CBI booked the Kochhars and Dhoot for alleged cheating and corruption in sanctioning loans to Videocon. According to the CBI, ICICI Bank loaned 3,250 crore rupees to Videocon, following which Videocon diverted 64 crore rupees to a renewable energy company, New Power, which had Chanda Kochhar's husband, Deepak Kochhar, as one of the promoters. The loan was later deemed an NPA, causing 1,730 crore rupees losses to the bank. Videocon, in fact, has been embroiled in other cases as well. The CBI alleged irregularities in the acquisition of stake in the Golfino Atom Oil and Gas field by Videocon in 2008. An inquiry then revealed that a consortium led by CBI sanctioned a loan of $2.7 billion to the company for these bids. The agency alleged that the loan amount was siphoned to other accounts and businesses. The company also lost a whopping 21,000 crore rupees in the 2G spectrum scam after its licenses were revoked by the Apex Court in 2012. The once pioneer of colour televisions in India is now closing in on liquidation. The downfall followed as soon as the people at the helm decided to diversify their business by taking on a lot of debt but failing to use the money efficiently. The company declared bankruptcy under the Insolvency and Bankruptcy Code in 2018, but several complications concerning loans have led to delay in the process. Bureau Report, Business Today TV.
It's more than the winter chill, sending shivers down the spine of business barons and powerful bankers across India. Just when everyone thought the ICICI Bank loan saga had got lost in the labyrinth, the CBI nabbed Chanda Kochhar last Friday, following it up this morning by netting an even bigger fish, Videocon Group Chairman Venugopal Dhoot. The two high-profile arrests have renewed attention on the phone banking scandals of the UPA era.
In just under 3 weeks from now, the Kochhar family was to travel to Jaisalmer for their son's marriage. A private jet had reportedly been chartered to fly the guests, including top industrialists, to the dream destination wedding. Chanda and spouse Deepak Kochhar's sudden arrest has put to paid all those plans. But it was the bigger post-Christmas arrest of one-time corporate icon Venugopal Dhoot this morning that sent shockwaves through Indian industry. Together, the two arrests, 5 years after the probe began, are among the biggest ever in Indian business history. Chanda Kochhar was among the first women to rise to the top office of one of India's biggest banks, picking up a Padma Bhushan along the way, with mentions in the Time magazine's 100 most influential people in the world in 2015. And then came the arrest this morning of Venugopal Dhoot. At one time among the most recognized, one of the most outspoken faces of India Inc. His arrest could well reveal the murky details of the quid pro quo deals with the Kochhars in lieu for loans from ICICI Bank. The arrests are a wake-up call for the industry. It's not often that blatant sweetheart deals and billion-rupee scams lead to such high-profile arrests, given that many other willful defaulters and banking fraud accused have in the past managed to escape from India. While the timing of the arrests may lead to speculation, the CBI told the court today that ICICI Bank is said to have suffered a loss of 1,730 crore between 2009 and 2011. The agency also told the court that Dhoot had not been cooperating in the probe and was arrested as a result. Bureau Report, Business Today Television.
5 years after the first allegations surfaced, the alleged ICICI Bank loan fraud case is back in the news, with the CBI arresting Videocon Group Chairman Venugopal Dhoot today, 2 days after the agency arrested ex-CEO and MD of ICICI Bank, Chanda Kochhar, and her husband Deepak. But what is the saga all about? Our managing editor Siddharth Zarabi spoke to independent banking analyst Hemendra Hazari regarding the same. Here's an excerpt of that conversation.
What is at heart here? Because the lawyers for the Kochhars have been telling the court that there have been inquiries and probes, including perhaps the banking probe by ICICI itself, which had absolved them of any wrongdoing allegations. What is at heart? Because this is a private sector bank. What is at heart of these allegations?
So the heart is obviously that there's an alleged case of bribery here, that she used her good offices to basically, give funds to a corporate entity, and that there was allegedly a kickback which was given to her via her spouse. So that is very, that is the charge here. And see, one thing you've got to note, the private sector operates really with very little accountability for senior officers at the top, and this is particularly in the financial services. As we have seen in the case of Rana Kapoor and ILFS, where both Rana Kapoor at Yes Bank and Mr. Ravi Parthasarathy at ILFS, they virtually ran their own kingdom with no accountability to their board of directors. While in a PSU bank, you have the CVC, there is independent checks and balances. While in the private sector, typically what happens is, even when you have found very senior officials guilty of their own, corruption, they are very quietly removed and no publicity is given at all, which is not the case in the PSU bank, because in the PSU banks, the CBI is called in and the publicity is given. So the private sector, by and large, operates with very little accountability for its senior officials. And we have seen this very clearly in ICICI Bank, because the board of directors then led by Mr. M.K. Sharma, who was the former legal head of Unilever, he steadfastly defended Chanda Kochhar's conduct till it became untenable because by that time, the press had got this news and there was daily coverage. If you see the way the board of ICICI Bank showed extremely poor corporate governance standards because they kept defending her. Even they had hired an internal review by, I think, Dr. Mangaldas Shroff, which had totally exonerated her. It was only when the Sri Krishna report came in that all this evidence came and the board finally decided to send her on leave and subsequently sacked her. And at that point in time, Amarchand Mangaldas and Shroff retracted their report, which is unheard of. So it tells you how the private sector really operates. There is all a cozy club. There is no accountability. And this is an outstanding example of that. Because everyone, once the Sri Krishna report came out, they all decided, yes, now is the time to act. But it was the evidence, was quite self-evidently those who have some idea of finance.
Mr. Hazari, you make a very important point about the cozy club, and it's been called phone banking also during the UPA era. When you talk about this cozy club, the obvious question that everyone wants to know is, what about the others? There have been several cases and a mountain of bad debts which is still being cleaned up, not just in the public sector, but to some extent in the private sector as well. Have things changed as far as this cozy club is concerned?
You see, the cozy club was being really made to ridicule public sector bankers, and they deserve some of that ridicule because they were doing phone banking, taking oral instructions from politicians and the bureaucrats. In the private sector, it operates in a slightly different form. The CEO takes his oral instructions from anyone, as we can see, because they are all colluding. We have seen this in the case of Rana Kapoor, which brought down Yes Bank. But apparently that was also the case in ILFS, which brought down ILFS, and it created a huge impact on the financial sector. In the private sector, we all say there is a board of directors and they're full of eminent people, and they will serve as a cross, check and balance against a very aggressive or corrupt CEO. But sadly, that is not the way it operates in this world, because independent directors, they feel beholden to either the senior executive who has selected them or to the promoter where there is a promoter. So they do not, in most cases, exercise any kind of independence. And basically, they collude with the CEO or with the promoter. And if anything goes wrong, their defense invariably is that we did not know. But what is actually happening is, in such cases, they deliberately don't want to know. That is, even if some evidence does come up, they will look away or they will exonerate the CEO straight away. And we have seen this exactly play out in Chanda Kochhar's case in ICICI Bank, where the board totally cleared her of any wrongdoings. You had even Mr. N. Vagol, who was retired, was doing the rounds of the business studios defending Chanda Kochhar's contract. When he had to get business to come out, he is retired. What was the point of him coming and trying to defend Chanda Kochhar and saying how honest she was? So the whole ecosystem, as you see in ICICI Bank's case, was actually protecting Chanda Kochhar.
Mr. Hazari, what are the larger implications of this arrest? Because while we have discussed what happened in the past and what should have perhaps been done better when it comes to corporate governance and board level supervision as well, what are the larger implications from this arrest?
See, one is that everyone thought that she had gotten away scot-free because no arrest of her had happened. So one is that, the big story is, why has the CBI arrested her now? And why had they not arrested her early? What has changed now, 5 years after the story first came into the news, that has taken them so long to arrest her? Obviously, something has changed. But the public really do not know what exactly has changed, what has made them arrest her. A lot of this information was available also after this news broke. The second is that what exactly happened to such people, because we have seen sadly the conviction track record of both the Central Bureau of Investigation and the Enforcement Directorate is abysmally poor. Most people they arrest, they seem to be unable to convict. They do not make a very strong case when the case goes to the courts. Now we have to see whether this case will also fall apart like many of the others do, or does it actually go ahead for a conviction? She has been
Vishal,
judged by people and even by corporate India, and that is why nobody has even hired her as an independent director after she left ICICI Bank or was sacked by ICICI Bank.
robust trade on the final Monday of 2022. The Nifty closing with gains of 200 points, reclaiming 18,000. Sensex also ending with gains of 700 points. But the day belonged to the broader markets. The mid-cap and small-cap indices both closing with gains upwards of 2%, reversing the brutal losses seen in the last week. The PSU Bank's rally also back on, followed by all sectors finishing in the green, barring the pharma pack. Among the top gainers today, top-tier lenders, SBI, ICICI Bank, certain metal stocks as well. Hindalco was up about 3%. Coal India, Bajaj, Finserv making up the rest of that list. On the downside, some of those pharma names, Cipla, Divi's Lab, Dr. Reddy's not really participating, followed by the likes of a Nestle and mild cuts on a Kotak Mahindra. Earlier today, I spoke with Chakri Lokapriya of TCG-AMC regarding how to steer best through the recent volatility in the markets. What should one add to their portfolio this new year and where to take some chips off the table? Listen in.
What the gains that were built on in the last few weeks was all undone in a matter of maybe 2 or 3 trading sessions. And this is clearly a case of an extreme fear and largely probably unfounded, at least on a fundamental basis. Partly it was the COVID fears in China, partly prior to that, few days prior to that was the US interest rates. The US interest rates bit is very highly telegraphed incident, so one shouldn't really expect anything. Interest rates are expected to continue to rise in the US. There will be some, they will reach 5.25. That's already been discounted in the market. So I think the second thing unknown was the COVID fear. But at least if you look at the numbers in the large countries, including India, COVID numbers are not going up so far. And so far it seems to be overblown. Against this backdrop, lots of stocks and sectors have corrected dramatically. Index has corrected about 5%. Individual stocks have corrected more than 20%. I clearly think it's time to buy on a fundamental basis.
Are you seeing any concerns with regards to any supply side issues that may come up? We've been anticipating, of course, huge squeeze on margins across the board. So when you are talking about earnings realigning, are there particular pockets where you feel we're going to see evidence of this?
I think, some of the sectors which have corrected, like for example, consumer discretion, hotel stocks, tire stocks, banks are, I think, at the core of showing good growth, protections, valuation, as well as there is no real moderation in their earnings growth, and if anything, it's the opposite. November, the month, there was some amount of retail slowdown, and that markets extrapolated. But if you look at December, there's again been an acceleration. So I think, all those pockets, which is consumer discretionary, banks, including cement, are looking good.
Going forward, what are you anticipating? What's going to be really big to watch out for this year when it comes to the budget?
I think the budget actually has to be positive for the consumer and for the corporate, especially given that you're going A, into an election scenario into the following year, and B, coming out of COVID. This was supposed to have been, 22 was supposed to have been the recovery year, but then you had the Ukraine war and external shocks, which actually pulled down lots of plans by countries, including India included, on their capex, etc., because nobody expected a Ukraine war. That led to high inflation. High inflation led to slowdown of capex. So all these confluence of factors had a snowballing effect, and so they're all things can't get worse from where they are today in terms of interest rates and inflation next year. So that will largely, which means cement as a sector will benefit because construction picks up ahead of elections. Then you'll see capex, which means that should pick up. If all these things pick up, the most initial thing, a sector to benefit is banks, because they lend to corporate, consumer, and the government.
Okay, I love the way that you've broken this up for us, Chakri. So cement, of course, continues to be key. Banks, financials, consumer, clearly on your radar. What are the avoids? Commodities, metals, maybe oil and gas, but metals in particular. What else would be on your avoid list? I mean, IT, yes, it's taken a beating this year, but would they still be in your basket, some of those heavyweights?
Some of the avoids would probably be still the power sector, again for the opposite reason. In an election year, they wouldn't try to reject the power prices, which is, so stay away from that. Telecom has had its run. As 5G's capex rolls out, incrementally that will be a drag on the sector. Metals, well, while the outlook is kind of subdued, the valuations have also significantly corrected. So, which means the top names, Tata, Hindalco, Tata Steel, and JSP should actually kind of benefit from a valuation perspective. When you mentioned IT as a sector, even if there is a slowdown in contracts, which means top line, still the companies have enough margin levers because of falling rupee, EBITDA margin expansion, falling attrition, which will help them to generate a 14-15% earnings growth. So given that valuations have corrected already for the IT sector, I think IT looks good, the front line, TechM, Infosys, TCS, etc.
Okay, fair enough. There has been a trend towards sticking towards the large caps and the safer bets, so to say, in the market, even across these sectors. Would you follow that? Would you be looking for some of those pickings in the broader markets, or would you also suggest staying safe at least for the next few months? Because if we're so bullish and positive on India, maybe this would be a good time to buy some of those mid-cap players.
Indeed, I think it is the time to buy India and also the broader market. If you take, very big banks like Bank of India, Union Bank, Canara Bank. Bank of India has a 5 lakh crore book, so it's not broader market in terms of the sheer size of the bank. And it's cleaned itself up. The NPAs are under control. Cost of funds has come down. And the bank trades at less than half a time's book. Punjab National Bank, a market leader at one point, due to well-known past mistakes, stock is trading at under half a time book. Yeah. Similar story with Canara Bank. So if you look at SRF, leader in the chemical space, chemical industry space, one of the market leaders worldwide, it has also corrected. So within the broader market, there are sufficient pockets which have overcorrected, which clearly warrant immediate buying.
All right, so that's diving a little bit more into those financials. You didn't mention the PSU. I mean, in the sense, private versus PSU, would you say it really is stock specific, or would you avoid the PSU names altogether? Because there's been a little bit of back and forth on that front.
PSU banks clearly would not, for the reasons just discussed in terms of valuation, risk reward is clearly on your side for an easy 40-50% of certain banks. On the other hand, if you look at the PSUs like the Bharat, the defense names, these stocks have done well and rightfully so, but valuations kind of reflect that. So those banks, those companies will Bharat Electronics, HA will continue to tread water, but not really fall, because their outlook is very strong.
Awesome. Great to identify some more of those picks. Chakri, when it comes to auto, and just to close off with that today, but does that also fall in your consumer basket? Is anything in auto on your radar?
Yeah, within auto, I think, the two-wheelers, TVS Industries, Hero MotoCorp, all these companies are seeing robust demand. I think, therefore, earnings estimates going into the next quarter will look really good. And correspondingly, auto ancillaries. If you look at the tire companies, their main raw material is crude related. Crude is down 30-odd%. So they'll have a margin boost. There is a volume boost you're seeing in autos. Companies like JK Tyre trade at about 6-7 times earnings forward. So which means their ROEs will double going forward. So against this backdrop, tires and auto companies look good.
And don't forget to catch this full conversation on businesstoday.in. You can also get hold of the interview on our YouTube channel, Business Today. That's where we leave it on the show tonight. Thanks for watching.